Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the small business community. Okay, today I want to focus on preparer due diligence, and this video is going to be for my tax professionals and my taxpayers alike because it involves both people. So over the last couple of days, even though I was trying to get my chill on, I was still checking out these internet streets, and the misinformation about these tax credits is just off the chain already. Usually everybody is a tax pro. Season starts like right now, but it started, a couple of days ago. So it was a little early this year. So I want to caution you on the things that you're seeing. For my tax pros, let me start with you first. One of the things that the IRS has done is essentially made us auditors, right? In the form of preparer due diligence penalties. For this year, 2022, preparer due diligence penalties is $545 per failure, up to $2,180 per return. Okay. Now, so that means let's assume you file 100 tax returns with due diligence errors. On the low end, I forgot to do that number. So on the low end, you would be looking at a $54,500 penalty. On the max end, you would be looking at a $218,000 due diligence penalties. That's just for 100 returns, okay? And so this is not something where you get this penalty and it's going to be all right. That's not how it works. So, the thing with due diligence penalties is not only can you get that penalty, but you can also get other penalties on top of that. You can get other civil tax preparer return penalties. You can be suspended from e-filing. You can lose your business. You can be barred from filing any tax returns other than your own. And then you can also face criminal penalties. Tax preparers are going to jail every single day because of filing fraudulent returns and because of just doing foolishness. So that's why I want to talk about this a little bit today. Now, the things coming up. First of all, it is illegal, against the rules. Do not file tax returns with your last pay stub. The IRS has said it. The banks that fund these bank products, they have also said it. Do not file people's tax returns with their last pay stub. Is it more than likely correct? Perhaps. We don't know. Okay? Just don't do it. I get it. It's tempting because people want their money now, right? I see the refund advance loans that are just peppered all over the place, okay? But resist the urge to break the rules just to get the money. This is why I say don't let dollars rule your decisions, because these banks will audit you. When they sit there and say, hey, we want to see this W-2 here and you can't provide it, they will bar you from using their products. If the IRS finds out you're filing tax returns with last paychecks, with those last pay stubs, you can be barred from filing and you can get fined. So just don't do it. Second thing, let's talk about these child tax credits, because this is generally where most people get their due diligence penalties from, are these tax credits. And those are the earned income credit, the child tax credit, the additional child tax credit, the other dependent credit, the American Opportunity Credit, and the head of household filing status. This is where your main penalties come from. Because see, these tax credits, these are the highest paying tax credits on the tax return. The earned income tax credit is the highest paying tax credit that we have. And the tax credit is a dollar for dollar reduction of your tax bill. Some refundable, some are not. Okay? But with this child care, this dependent care credit that is floating around, yes, there is a lot of money on the table. But again, do not let dollars rule your decision making. Tax pros, you are going to have to demand the documentation. If you don't get the documentation, you either don't file or you document profusely that, hey, I asked for this, this, and this taxpayer said they could provide it. You make sure you get something from the taxpayer that's saying, hey, my tax preparer asked me for X, documentation, and I said I could provide this. Whatever you need to do to cover yourself. Because at the end of the day, not only is the taxpayer going to be in trouble, but the IRS is going to start with you, tax professional, because you are the one who should know the rules. So you have to make sure that you are demanding the documentation. If someone comes into you with this dependent care credit, okay, so the way that dependent care credit works, right? So this year, you can claim up to $8,000 in dependent care credit. 50% is refundable. Okay, and that's up to 2 kids. So that's $16,000 total. Up to $8,000 of that is refundable. Now, let's make sure that the numbers make sense. And let's make sure we got documentation. What do I mean? So if you have someone who, let's say, is making $15 per hour, on the gross end, that's going to be about $31,000 per year. So if that taxpayer comes to you and says, hey, I paid $18,000 in childcare. And so that's like over 50% of their income. You got to make sure the numbers make sense. You got to make sure that there's documentation. And oh, by the way, one of the posts that I saw is like, if you pay anybody to watch your kids, all that stuff, yada, yada. Okay, so listen to me. Do not think that the IRS will not be double checking these numbers. If somebody is saying they paid Sue and here's Sue's social security number, then guess what? Do you not think the IRS is not going to run Sue's social security number to make sure she claimed this income? Child care facilities that are actual businesses, they provide their clients with a statement that shows what they paid for which child, right? So you have to be adamant about this documentation this year, because if not, you'll be setting yourself up for failure. And oh, by the way, taxpayer, if this tax professional has done their job and you provide false documentation, okay, please understand that one, you'll be paying that refund back. And secondly, especially if you get the earned income credit, believe you me, you will be barred from even claiming the dependent for 10 years. It happens. They have these laws for a reason. So listen, please, oh, please, oh, please, stop selling social security numbers. I get it. There are like some serious PPP loan numbers that are floating around out there that is available for these refunds. I'm telling you, do not let these dollar signs rule your decisions, because when you wind up having to pay this money back, it's not cute. When you wind up having these tax preparer penalties, it's not cute. And please understand, for my tax pros, this is not something that you just like you get an offer and compromise. That's not how preparer penalties work. You're going to have to show that you did your homework, that you asked all the questions, and that you had the documentation. That's going to be your job. And if you can't do it, guess what? You're going to have to write a check. So somebody, whenever I give these warnings, somebody usually tells me that I'm the grim reaper of the tax profession, the tax industry. If me being the grim reaper just gives you pause just for 1 minute to make a better decision, I'm here for it. Don't let these don't let these dollars get you put out of business. this one little thing, this little extra money that you may get right now, is it worth your entire business? Is it worth you having to pay additional penalties? Is it worth you going to jail? Some people like to roll them dice. I ain't that chick. So, tax preparers, make sure you understand what